Good morning. It's time for Trading Hour. We are coming to you live from the CNBC-TV18 Motilal Oswal studios. I'm Hormuz Fatakia. With me is Ritu Singh from the Bangalore studios. And it's a fight between cat and mouse as of now on the benchmark indices. We are counting down to the final 3 days of 2025. But the cat and mouse fight is between actually the bulls and the bears. The bulls trying to defend 26,000 by hook or crook. But the bears are also not giving up, at least as of now, because the index is now at the lowest point of the day, and the Nifty Bank too painting a similar story. The 59,000 level was the most important one to defend. It's gone below that level, and it is now very close to that 38.2% retracement of the recent rally, which comes up to 58,890, and that is the important level now to track on the Nifty Bank. So both the Nifty and the Nifty Bank nearing very key levels. Of course, participation remains low, volumes remain low, but fresh from a holiday, Ritu Singh is back with us. Ritu, welcome back.
Thanks, Hormaz, and good morning to you. I'm hoping the bulls and bears are also, the kind of cat and mouse game you're talking about. Thin volumes as we near the end of the session, but, the party is not really started. That's what we're waiting to see on the markets. The markets have been trading in a range. The final 3 trading sessions that you said, they've given up some of the gains since the start of the day, started up just about 50 points. And now, you can see the Nifty and the Sensex down about, 1/5 percentage each or more. The Nifty 50 now at 26,000 and the Sensex 84,865. The rupee has also fallen a bit early in trade, now at about 89.95. In fact, Nifty has been the third worst global performer among the 21 major indices globally. But Hormaz, in terms of buzzing stocks, there was a lot of action. Coforge was a big one we've been speaking about all day today. But tell us what else is buzzing in trade.
It's been a painful grind lower for the benchmark index, with a very narrow range that the Nifty continues to trade in, for that matter. And the broader markets too, there's specific stock activity that you get to see. Of course, Coforge has seen very sharp moves on either side right through the morning. We'll talk about that as the show goes by. But if you take a look at some of the broader market names in particular, you start off with a name like HFCL. It snapped a 2-day losing streak in today's session. The stock is up 7% today, and since then the volumes that the stock at which has moved higher is already at the highest level since August of 2024. We have had more than 10 crore shares that have been traded on HFCL. The 20-day average is around 47 lakh shares. The big talking point for the stock is the fact that despite it of course this move, the stock remains below key moving averages, and the stock will move out of the FNO segment from tomorrow's trading session. So tomorrow will be the last day for the stock as an FNO stock, and then we start trading only in the cash markets from Wednesday. It has had a forgettable year so far. It's down 41%, and it's turning out to be the worst year that it has had since 2008. So not good going for HFCL in 2025, but among the top buzzers today. HEG and Graphite India are making an up move today. Both of them trading with gains of around 5% each, and both of them are also trading on substantially high volumes as well. For HEG, we have had 25 lakh shares that have been traded. Graphite India has had 20 lakh shares traded. Now the 20-day average here too, HEG is now 8x its 20-day average in terms of its volumes, and Graphite India is more than 20x its 20-day volumes, 1.5 lakh shares being the 20-day average. And lastly on the list is a Mishra Dhatu Nigam, or Midhani as they like to call it. Defense names have been on the up move all through this session today. Ahead of that Defense Acquisition Council meeting, has gained in 6 out of the last 7 trading sessions. The stock's volumes today are the highest in the last 5 months, and in terms of the volumes today as well, 34 lakh shares have been traded compared to a 20-day average of 1.2 lakh shares. And even in terms of the stock, the stock has now crossed the 50-day moving average of 343. The 100 and 200-day moving average on the upside is at 366. So important levels on the upside that lie ahead for Midhani. And the stock, courtesy of this 12% up move today, has turned positive for 2025, and the stock was down almost 20% in the year gone by, Ritu.
Well, let's focus on another stock, Hormaz, Coforge. When you talk about volume buzzers, about 48 lakh shares traded today. That stock is down about 0.3% as we speak. that remains in focus. Also, a quick check at the markets. They've now fallen. Nifty below 26,000, 25,989 as we speak. Sensex also trading with cuts of about 200 points. But, Coforge, that's the stock we're talking about because it has announced the acquisition of US-based engineering services company Encora in a $2.35 billion all-stock transaction. Now, the annual revenue of the combined entity is going to be $2.5 billion, and the management has called it a defining moment for the company. First, let's go across to Reema Tendulkar for the significance of this deal. Reema.
Thanks so much for that. I think that is the big question everyone is asking. Is this deal between Coforge and Encora expensive? Well, the short answer is it's a good asset, a great asset, but perhaps a tad bit expensive. Now, Coforge is paying $2.35 billion for Encora. This is a company with estimated revenues of $600 million, which means the acquisition is being done at an EV to sales of 3.9 times. Now, putting that in context, most global digital engineering companies today are trading in lower multiples. Now, this I picked up from a Motilal Oswal report where they're saying a company like EPAM is trading at 2 times sale. Globant is trading closer to 1.3 times. And even some of the recent M&A deals were cheaper. Now, Cognizant acquired Belcan last year at roughly 1.6 times EV to sale. Infosys bought Intech at about 2.6 times sales, which raises the valid question, has Coforge paid a premium? Especially when you see it in context, analysts point out, to Encora's organic growth, which is slow to 7 to 8%, while Coforge itself has been growing much faster at mid-teens. Now, JM Financial summarizes by saying the valuation looks rich given Encora's 7 to 10% growth profile. Now, moving on, when the price is high, there is also very little room for error. So what are the risks? Well, I can see 3 of them. One is integration risk, because this is a very large acquisition, the largest done by an Indian company. Encora is more than 30% of Coforge's size compared to their earlier deals like SLK Signity, which were smaller. So when there is such a large asset, integration is not the easiest. Secondly, the management is also guided for the acquisition being EPS accretive by FY27, but this requires flawless execution. The second risk is dilution risk. It's an all-stock deal leading to 21.25% equity dilution for the existing shareholders. And on top of that, Coforge has the option to raise an additional $550 million via QIP to retire the debt. As of now, it's not decided by the management whether they will flex that option, but it's still an overhang. And the third one is the overhang from private equity investors. Encora shareholders will hold about a 21 to 22% stake in Coforge, and 50% of this will unlock after 6 months, the remaining after 12 months. Analysts say that this is a potential supply which will cap the near term. But it's not all negative. There are some real positives here. Now, post-deal, Coforge becomes a $2.5 billion revenue company with EBIT margins of close to about 14%. The management is calling this a defining moment in Coforge's journey. And there is a clear step change in the company's capability. Encora brings AI-led product engineering, and the combined company will have nearly $2 billion of AI-linked revenue. The deal also opens up high-growth white spaces for the company like high-tech and healthcare, and the revenue synergy potential is significant, especially through cross-selling, and Coforge does have a very strong execution and an M&A track record, which gives the street some comfort. From a stock perspective, just over the last couple of days, the stock had declined close to about 10%. So some of the concerns are being addressed. But other than that, it's been such a wealth creator. Its 3-year revenue run rate the stock price return is 120%. In the last 5 years, it's more than 1,000%. So it's a bold, transformational acquisition by Coforge, and now it's up to them to deliver on that.
Reema, thank you for breaking that down for us on Coforge. The stock has had a very, very choppy morning. The stock opened around a couple of percentage points higher, then gave up all of those gains, moved into the red. Then after that double upgrade that came in from Macquarie, the stock moved to the highest point of the day. And now again, it has sold off from those elevated levels back down around 0.6% lower as we speak. So 1660 on Coforge. So far, the 4th straight day of losses for the stock. Just before we hear out the management, just pull up the index, which is now well below the mark of 26,000. We started off at around 26,003-4, and now the index has moved towards 25,980 as we speak. So 60 points lower now on the Nifty at the lowest point of the day. and it will be interesting to see whether some support emerges towards that 25,950, 25,900 range as we speak. But staying back to Coforge, listening to what the management had to say on their analyst call with regards to this acquisition.
The acquisition of Encora is a defining moment for our organization. And I mean a defining moment. Born in the Silicon Valley, California, Encora is one of the select technology services firms with an AI native DNA that provides software engineering services for digital native companies and Fortune 1000 enterprises. Encora works at the convergence of AI, cloud, data, with service offerings that span intelligent process design, agent-native product engineering, core modernization, AI foundation, data readiness, and AI ops.
From financials perspective, the consolidated turnover of Encora Group for financial year 26, the estimated number, and they follow April to March financial year. So estimated number for financial year 26, revenues are around $600 million. And adjusted EBITDA of the firm is 19%. With Encora's current margin profile and the anticipated synergies that we see in the business, and the combined business is expected to operate an EBIT margin of 14% post amortization of intangibles that will be created as part of the purchase price allocation for this acquisition. Despite the primary infusion, the deal is not expected to be EPS dilutive on a consolidated basis because of the strong margin profile of Encora and expected synergies from the two businesses, that is Coforge and Encora, coming together.
This will reposition Coforge as a player with scaled up nearshore delivery capability in LATAM, with an exceptional engineering and AI talent base servicing US clients. Encora has a large and widespread nearshore delivery capability with more than 3,100 delivery team strength in its LATAM delivery centers. It will significantly expand the West and the Midwest US client footprint of Coforge. Pre-acquisition, as you know, only 25% of Coforge's North America geo unit revenue came from the US West and Midwest. This acquisition will provide a fillip to Coforge's North America growth plans. Coforge's North America business is expected to jump by around 50% to $1.4 billion post-acquisition. The combined firm will now have 45 $10 million plus highly scalable relationships.
All right, the management quite bullish on the Encora acquisition. On that note, we're going to take a short break, but don't go anywhere. Up next, we'll focus on the bond market with Manisha Gupta, as always, in just a bit.
Welcome back. So 60 points lower still on the index, but the big talking point aside of the markets has been this gravity-defying rally that you are seeing in precious metals, base metals, you name it, and they are up. Be it nickel, platinum, copper, silver, gold, the list is endless. So we'll leave the hard part to Manisha, who is joining us now to tell us what exactly is leading to this up move. Manisha, good morning.
Thank you for that, Hormuz. Well, yes, what an year it has been and continues to be like that. Well, actually, I'm not able to do my year-enders yet because every single day there's a new high and you can't, let go of this market the way it really seems to be behaving. Take a look at copper, and that should come in on your screens right now. It's an upper circuit on MCX. It's all-time high that we are trading on into the markets as well. 8% of gains is what we are looking at this point in time. I also want to take you through the chart on what we've done in sense of the MCX copper prices in most part of this year. So when you look at the last 1 week, it has been 22% of gains for the MCX prices there. The last 1 month has seen 33% of gains. It's 46% up in last 3 months itself. 53% of gains in 6 months and 73% higher from where we stand from the beginning of this year. So that's the kind of run-up that you have seen in case of copper as well, giving you more returns. By the way, in sense of gold as well, copper is the new gold is a statement that we've been using a lot of times on the channel already, and the surge just about continues. So it's not just about the Indian markets. The LME copper is trading at a record highs of 12,280. When you look at the Shanghai markets, they are trading at an all-time highs. The US markets have hit an all-time high of $5.9 a pound as well. So across Asia, or in London, in China, in US markets, you're looking at all-time highs when it comes to copper. 3 or 4 major points, the reason that you're looking at this rally. One is the US president reiterating, pledging, by the way, that they will put duties on commodity-grade copper in the next year sometime. The markets believe this could happen as early as the first quarter of 2026. Remember, there is already a 50% tariff on semi-finished copper products that already has been in place, keeping the copper prices higher, so much so that you have a lot of copper being flown into US, and that too at a premium of around $500 a ton or thereabout. There also are output concerns that we have seen in Chile, in Peru, in Indonesia. There is lower output guidance coming in from miners as well, even as you haven't seen lower output from miners, but it is the guidance that has led to sentiment positive for these. And then you have the copper inventories dislocated as well. There's almost 1 million tons of copper right now parked in the US warehouses, which is not being used, but it is there in anticipation that you could be looking at tariffs. So that clearly has led to a dislocation in the international markets. Yet another reason that you have copper prices surging higher. And then apart from that, it's a deficit in this year, perhaps next year as well, and a very strong industrial demand also anticipating, which is keeping speculative buying, physical buying, investment buying continuing in case of copper.
Wow, upper circuit on MCX copper, upper circuit on other metals as well, and it's a gravity-defying rally. So good going for a lot of these metals. Actually, very good going, if you could call it that. Manisha, thank you for those updates. Both gold and silver now headed for their best year since 1979. That's the kind of moves that we have seen on both of these precious metals, not to discount the other base metals as well. Take a short break. On the other side, get talking technicals with Nagraj Shetty of HDFC Securities.
Welcome back. You're watching Trading Hour. The market breadth still very much in favor of declines. The advanced decline ratio at 1:2. So 2 stocks declining for every 1 stock that is advancing. And we were talking about the metals pack just before the break. In fact, the metal index is actually the only index in the green at the moment, all others in the red. But let's focus on some of the market technicals. We have a special guest joining in, Nagraj Shetty, Senior Technical Research Analyst from HDFC Securities, is with us for a check of the market. Nagraj, welcome to the show, and we wish you a Happy New Year. If we don't speak to you again, start by telling us how you're going to trade the markets now. Thin volumes, last 3 trading sessions, range-bound trade.
Hi, good morning. Rightly said, market is in a range-bound action. Basically, market is trading in a range of around 26,200, 300, the higher levels, 25,800, somewhere around lower levels. Though market facing resistance somewhere around 26,200, 300, the underlying long-term trend remains intact, and I'm not expecting any bigger decline from here onwards, and 25,800 is going to be a strong support for the market. Basically, market is preparing a base for a decisive breakout of 26,200, 300 levels over the period of time.
What about specific stocks, Nagraj?
Yeah, I have 2 stocks. So one is from metal side, Tata Steel. Chartically, Tata Steel has been moving in a consolidation phase after an initial up move over the last 5-6 sessions. Currently showing an attempt of breakout of this bullish range moment. Currently trading around 173.35. One can look to buy at this point of time. The initial upside target would be around 183. One can place a stop loss at 168. Second one is from KFin Tech. KFin Technology Limited has been in a larger consolidation phase below the resistance of 200-day EMA in the last few months, and the overall chart pattern is indicating an accumulation phase at the lower levels, and currently the stock is placed at the breakout point of around 1100 levels. Currently trading around 1098, 1099. One can look to buy at this point of time. Initially, target would be around 1160. One can place a stop loss at 2060.
Nagaraj, what about Hindustan Copper? The stock is showing no signs of slowing down whatsoever. The 7th straight day of gains now for the stock.
Yes, rightly said. No respite for the bears who has gone short for this point of time. It has been in a continuous up move, though placed at the higher level around 528, 530. There is no clear-cut indication of any reversal pattern building on this chart. Chartically very strong, and I'm expecting next hurdles from here onwards around 560, 565 levels in the near term.
All right, Nagaraj, we'll leave it at that. Thanks very much for bringing us those ideas. We'll move on to our next segment where Sudarshan joins us to get us the latest trends from the F&O space and the cues to take from there. Sudarshan?
So it's a new week, but the move that we are seeing in the market is similar to what that we saw in the last 2 days. Basically, the previous week that we saw, that was a range-bound trade. Even today also, both for Nifty and Nifty Bank, it's a range-bound trade. For Nifty, 26,000 has become very important level, while for Nifty Bank, 59,000 is acting as an important level, both for the call writers as well as for the investors who are looking to buy the put options. Now, the reason the range-bound trade, if you take a look at the PCR also, that is put call ratio, which has slipped further, and now it's around 0.70 against the previous level of 0.76. Now coming to the options data for Nifty, 26,000 and 26,100 on the call side. For both these options, while we are seeing a big increase in the open interest, premium for both these options has taken a sharp fall, while on the put side, 26,000 and 25,950, even 25,850, all these three put options are seeing an increase on the premium. Similar trend is being seen for Nifty Bank. On the call side, 59,000 as well as 59,200. For both these options, premium has taken a sharp fall, while on the put side, 58,800. Now, if Nifty Bank fails to hold the level around 58,800, there is a possibility that it might fall further and go and hit the level of around 58,500. For now, support for Nifty, 25,910, that is 50-day moving average. Resistance will be 26,140, that is the Friday's intraday high. For Nifty Bank, support will be 58,700, that is 50-day moving average. And resistance will be 59,270, that is 20-day moving average. Talking about some of the stocks that are seeing fresh longs. First one is Bharat Dynamics. Ahead of Defense Acquisition Council meet that might consider the order worth rupees 80 or 86,000 crore for the weapon system. Because of that, or ahead of that, Bharat Dynamics is seeing fresh longs. One stock that has been very strong for the last few trading sessions, that is MCX, and today also this stock or this counter is seeing fresh longs. Two stocks that are seeing fresh shorts. IEX, on Friday there was a report of company might cut transactional charges, and today also this stock is seeing fresh shorts, and another company that is seeing fresh short is Dixon Technologies.
Wow, IEX and Dixon Technologies seeing fresh short positions, unwinding seen in a lot of these call options on the higher side. So thank you for those updates there. Well, 70 points lower now on the index, 25,972 is where the Nifty currently lies. So now well below the 20-day moving average. The 50-day moving average is still some distance away, but we'll keep an eye out on all of those important levels. So as of now, the third straight day of losses for the index. Take a short break, continue our conversation on the markets with Nilesh Shetty of Quantum Advisors on the other side.
Welcome back. You're watching Trading Hour. Let's shift focus to the automotive space. November had been a strong month, but how has auto demand played out in the month of December? We go across to Sudarshan again, who's here with an analysis of the data from Vahan. Sudarshan, how's it looking for December so far?
So, Ritu, the strong demand that started in the month of August or say September after government had announced GST rate cut is likely to continue. And all these companies may report strong numbers even for the month of December. One company that you report very closely or you track very closely is Ola Electric, and this company might report another month of a very healthy decline, if I can say so, and it might see a decline of almost 50%, while its competitor Ather Energy may see a growth of almost 40% or more than 40%. But first, talking about the overall registration in the month of December, or say as of December 28, total registration is seen rising by almost 9 to 10%. And if you talk about two-wheeler, that might see a growth of almost 4%. All the four-wheelers, both passenger vehicle as well as commercial vehicle, both these segments might see a registration increase in the double digit, and that range can be of 14 to 16%. For PV, it can be 15%, CV, it can be around 16%. One is the biggest outperformer is going to be three-wheeler segment, where growth or registration increase can be as high as almost 28 to 30%. If you talk about the company-wise in the two-wheeler segment, two outperformers that both these companies have been outperforming continuously over the last 1 to 2 years, and those two names are TVS Motor and Eicher Motors. Even in the month of December, both these companies can outperform. Biggest underperformer this month can be Hero MotoCorp, which is likely to lose market share of more than 500 basis points. There can be a minor improvement for Bajaj Auto, mainly on the back of good exports data, but as far as domestic data is concerned, it might be another month where Bajaj Auto can report either flat or slight decline as far as registration data is concerned. Now coming to the four-wheeler, it will be a very good month for both Mahindra and Mahindra Auto and Maruti, and both these companies can see registration rising in the range of somewhere 9 to 14%. But it would be a very strong month for commercial vehicle segment, where both main companies, those are Ashok Leyland and Tata Motors, both these companies are going to see registration rising by almost double digit, and that can be in the range of 14 to 17%. One outperformer that is going to be three-wheeler. Now lastly, electric two-wheelers, Ather Energy is going to registration rise by almost 40 to 45%, while on the other side, or like Ola Electric may see a contrasting move, and registration may decrease in the range of 40 to 45%. So overall, it's going to be a strong month, or it's going to be another month of very strong registration data as far as auto companies are concerned.
Sudarshan, thank you very much for taking us through that. So another strong month expected for automakers in the month of December. But again, let's shift the focus back on metals. That's where the party has been, and we keep coming back to it. Now, one stock in focus that we've been talking about is Hindustan Copper, gaining for 7 straight sessions. And as we speak, it's up about 10.6%. And Hormaz is back here to tell us why that is. Hormaz?
The prices on copper or any other precious metals or base metals, as we were just mentioning a few minutes ago, is showing no signs of abating whatsoever. And Hindustan Copper is being well and truly part of that party as well. 11% higher in today's session as well. So it's the 7th straight day of gains. Remember, last week the stock was up around 22% last week, which was the best week that it had had since February of 2021. And courtesy of today's up move, the market cap of the stock has crossed 50,000 crore rupees, and at these levels of 526, the stock is now trading at levels last seen since March of 2010. So it's a nearly 16-year high for Hindustan Copper in today's session. And the copper prices, as Manisha was also highlighting, in the MCX they are at an upper circuit, and even in the global markets on the LME, the prices had crossed $13,000 a ton as of now. So all of them boding well for Hindustan Copper, and their stock doing well for itself today. Now, even in this 7-day rally that it has had from the closing of the 17th of December till date, the stock is up anywhere between 40 to 45% just these 7 days. And if you look at the shareholding as well, of course, the PSU, the government holds majority stake at 66%, negligible holding on the mutual fund side. FPIs hold around 5%, but no major name mentioned there, which has a 1% or more shareholding. Smaller retail shareholders have around about 14.5% stake. The remaining comes up from the HNIs, the larger retail names. And if you take a look at the LIC stake, as we were mentioning, around about 4.5%. At the start of the 7-day rally, it stood at around about 1,500 crore rupees. Within these 7 days, the value has now increased to almost 2,200 crore rupees. So 700 crores in 7 days, a clean 100 crore profit per day is what LIC has made in this rally on Hindustan Copper. And with with this move, the stock has also doubled on a year-to-date basis, and it has had this history over the last 5 years. The stock has doubled every alternate year. It doubled in 2021, fell in 22, was a 150% in 23, then again fell in 2024, and now, courtesy of this up move that you have seen in the month of December, the stock has doubled on a year-to-date basis as well. Of course, goes without saying that the stock has gained on very, very strong volumes in today's session as well. So 10% higher, almost 11% at one point on Hindustan Copper, market cap crossing 50,000 crore, and now nearing the highest level in almost 16 years. So Hindustan Copper for you there. Take a short break. On the other side, we get talking with Nilesh Shetty of Quantum Advisors.
Welcome back. You're watching Trading Hour, and the markets continue to extend losses. From the morning that we saw, the Nifty is now down about 70 points as we speak, and the Sensex down about 250 points. But let's shift focus to the year that has been. It's been a productive year for the government. In all, about 28 bills were introduced in the parliament, ranging from a new employment guarantee scheme for rural India, tweaking rules for foreign direct investment in insurance, to laws revising the duties applicable on tobacco. CNBC-TV18 Sapna Das looks at some of the key laws that were aimed at keeping the reforms agenda going and reports that 2026 is likely to see this exercise being taken forward.
2025's winter session of Parliament has probably been one of the most productive in recent history. Lok Sabha saw productivity at 111% and Rajya Sabha 121%. In just 19 days of the session, 5 new bills became law, while 1 more bill was referred to a parliamentary panel. Of these 6, at least 3 are reform-oriented: the nuclear energy bill, the bill to amend insurance laws, and the securities markets code. The laws supporting the overhaul of the goods and services tax were also passed in this session. And then there was a new rural employment guarantee scheme which caused quite a stir in the House. The bill goes beyond amending the 20-year-old UPA-era flagship Manrega of 2005. The new bill increases the guarantee of employment to rural households from 100 days to 125 days in a year. However, it shifts a portion of the cost onto state governments, 40% against the earlier 0%. Cosmetically, the government has changed the name of the scheme by dropping Mahatma Gandhi's name from it. None of this sat well with the opposition or experts.
हर योजना का नाम बदलने की जो सनक है ये समझ में नहीं आती है सर जब ये किया जाता है तो सरकार केंद्र को पैसे खर्चने पड़ते हैं बिना इस सदन की सलाह लिए इस तरह से जल्दी में विधायक को पास नहीं होना चाहिए सर ये विधेयक वापस लिया जाना चाहिए
The G bill, which says that 60% for most of the country, barring northeastern states and hill states and union territories, the new bill says that 40% of the money will have to come, even for labor component, from the states. Now, there is no reason that the states may want to do this. And in fact, in trying to bring the 60 and 40 together, most parts of the country, the sufferer will be the worker who during every time of economic distress, and those distressed workers who find themselves looking for alternative employment will be unable to get any kind of guarantee. As it is, it's been very difficult because of lack of allocation.
But the government stood firm.
पता नहीं क्यों जी राम जी नाम आ गया तो ये भड़क गए महात्मा गांधी स्वयं राम राज्य की स्थापना की बात करते थे और उनके अंतिम शब्द भी हे राम थे.
And the bill was pushed through with just 5 hours notice.
जो सदस्य जिसके पक्ष में आ गए, जो सदस्य विरोध में ना गए, मेरे विचार में निर्णय हाँ वालों के पक्षवा विधेयक पर विचार करने के प्रस्ताव को स्वीकृत किया.
The other big ticket change came in the foreign direct investment rules. This was driven by 2 bills. The Sabka Bima, Sabki Raksha Amendment of Insurance Laws Bill 2025 and the Sustainable Harnessing and Advancement of Nuclear Energy for Transforming India Bill 2025. The Shanti Bill allows up to 49% FDI in the nuclear energy sector. It also allows private players through joint ventures to build, own and operate nuclear plants while the government retains control over core functions. The amendments to the insurance law now permit 100% direct investment by insurance majors. Now, realistically, while only 4 of the 74 players in the insurance space are at 74% FDI, the government views allowing 100% FDI as an enabler for global majors to set up shop without shopping for an Indian partner.
We have heard a lot of these FDI people who want to come into this country searching for a partner, joint venture partner. It's a mammoth effort. Now, by doing this, we're able to bring them to the country directly, of course, with all the Indian laws which are passed by this parliament.
Market regulator SEBI not only got a new chairman in Tuin Kanta Pandey in 20... specific circumstances. The bill is being right now examined by
for the government and all the reforms that were undertaken during 2025. Nilesh Shetty, Portfolio Manager from Quantum Advisors, is now joining in. Nilesh, good morning. Thank you for joining in, and compliments of the season to you and your team as well. You know, metals have been possibly the only talking point all through the last month or so. The breakneck rally that you have seen across the space, be it precious metals, base metals. Do you still consider metals to be just a tactical play, or is there a proper cycle turning for the better in this? And if so, where do you place your bets within this sector?
I mean, season's greetings to you and to your viewers. For us, it's been slightly expensive, the entire sector. I mean, there is this thesis being made out of super cycle with spends on data centers in the Western world, but it's a bit more complicated than that. There is China, which is slowing down, which again is a large consumer of metals for most categories. So it's not as simple as people make out to be. When you look at the valuations for the bucket, it is fairly expensive, and metals actually have been the best performing sector in CY25. So I think for us, we have a small position there, and we've not looked to add any new position there. And in the position that we have, we may exit that as valuations become more expensive.
Nilesh, hi, good morning. This is Ritu. Apart from metals, the other talking point, at least recently, thanks to the Coforge deal, has been the IT sector. Now, for the better part of the year, we saw a bit of pessimism, especially with the H1B news, the AI trade, etc. But now, do you see some opportunity there? Do you see a meaningful pickup? What are some of the, attractive themes that you're looking at with the rupee acting as a tailwind?
Yeah, that is correct. IT actually has been one of the worst performers this year. The assumption was that Indian IT companies may not be able to price their products as they were doing historically because of productivity gains, and there will be a deflation in pricing, which, I mean, it's always been the case. Annually, there was deflation in existing contracts. It is not new. Given where valuations are, we found value. We think they will move up the learning curve. I think they're training a lot of their employees on the AI skills. And where they specialize is in customization. So a lot of their Fortune 500 companies, when they want to implement AI, who do they turn to? Indian IT services are sort of one of the places that they will look to. So at least for us, valuations look very, very attractive. We continue to favor large cap names because valuations are a lot more reasonable there than the mid cap IT names. And we've actually increased our weight by about 300-400 basis points in that category.
Nilesh, the other major talking point has been the large amount of money that has come into the financials in the country, be it banks, be it NBFCs, more predominantly so the smaller private names, be it the RBLs, the Federals. You just saw a big deal in Shriram Finance as well. Where are you placed among the financials? Are you looking at the smaller private names, the larger private names, the NBFCs, or even the PSU banks for that matter?
So we've never allocated to PSU banks below the largest player because we think governance norms and the quality of books dramatically deteriorates. The largest PSU player, because of the size of the book, is still able to manage. But our preference has always been high quality private sector banks, and we continue to have a large allocation there. We had select NBFCs, some of the names that you mentioned, where we felt governance norms were decent. And we've actually exited them in this rally. We felt valuations are far above where they should be, given the quality of book that they run. So in some sense, we have increased allocation to private sector banks, where we feel reasonably confident of valuations. But we've actually exited some of these NBFCs from the portfolio, where we think valuations have moved ahead of the underlying fundamentals.
Well, yes, private sector banks actually at some of their lowest valuations in 2 decades. Any specific names you'd like to call out there, Nilesh?
Yeah, unfortunately, I cannot mention names, but we own the top 2 largest private sector banks in the world.
Okay, Nilesh, broadly stepping away from the sectors, for the markets itself, do you think there are enough sort of, levers for a steady uptrend from here? We've seen a bit of a volatile trade, thin volumes as expected towards the end of the year, but the key catalysts you'll watch out for come 2026.
Yeah, relative to rest of the emerging markets, India has actually not done that well. It's actually been a very poor performer. But compared to its own history, it's actually been quite reasonable. So CY25, we may end up with a 10-11% rupee return, which is not that far off from what you expect from equities, between sort of 12 to 15%. So it's been a decent year for equities, not a great year. But what has happened is, in the interim, because markets have risen by a small amount, earnings have moved higher. So the overvaluation that you saw at the end of last year, that has reduced. It is still not a cheap market, but it is not as expensive as it was at the start of last year. So in some sense, there is reasonable valuation comfort. And again, the economy continues to expand, and we expect cyclicals which dominated last year will continue to do well. Some of the names sectors that did well this year may again continue to do well in CY26, like banks, which is where our largest allocation is. We have allocated more to IT, as I explained, because we think valuations there are a lot more reasonable. But there's nothing on the horizon that suggests the economic expansion that India is experiencing will slow down materially. And given valuations are a lot more reasonable, we expect long-term FIs to continue to allocate to India. And we will draw, last year was an aberration, this year was an aberration where we saw a large outflow. But we expect that to reverse as you move forward in time.
Nilesh, have you looked at railways and defense? Both those themes were the big talking point until a better part of 2024. Then after they topped out somewhere in June or July last year, they've just been a forgotten story. The defense names, of course, did spring up in May and June, but even those have corrected at least 30-40% from the record highs that they made from there on. And same is the case with the railway names. Most of them are down 40-50%, barring this rally that we saw in the last week. Do you still see some value emerging within these names, be it the railways or the defense, especially considering we are on the cusp of another union budget?
Yeah, when you look at valuations in the entire engineering space, it is extremely expensive even today. They were rivaling consumer staple valuations still a few months ago before the correction got triggered. But even after that correction, they remain extremely expensive, and they remain a highly cyclical business with ROE profiles which go up and down, and margin profiles which which remain very volatile. So we actually have no allocation to that entire bucket purely on valuations. I think it's still very, very expensive, and investors who want to invest with a 4 to 5 year horizon, I doubt they will generate substantial returns from current levels.
Nilesh, on the auto space, anything there you see opportunity for? It's been a stronger December compared to the kind of sales figures we saw in November. Anything you're seeing there in the auto space?
So we had a large allocation to the two-wheeler space at the start of the year, but given the catalyst of GST rate cut that played out, most of these stocks have moved materially higher. So we've actually trimmed our holdings there, and we've exited one of the names in the portfolio, or virtually exited. We have a small weight there. So our allocation there has actually come down materially. We continue to hold a couple of names where we think valuations are less expensive. But if they continue to move higher, we will actually exit that space. It is now getting more and more expensive to hold.
That you own, are they from the two-wheeler space, the four-wheeler space, or the CV space?
Two-wheelers and a large SUV manufacturer.
Two-wheelers and a larger. All right. Nilesh, thank you for sparing time and joining us today on the show. And we wish you good luck for the new year as we go into 2026. Thank you so much for sparing time and joining us today. By the way, there is an ever so slight recovery on the index. It's a 10-point recovery, even if you would want to call it that. The index at one point was down around 75 points. So now it's down around 60. So 25,980. Still looking to find some support or trying to get back to that 26,000 mark and sustain above it. So it'll be interesting to see how the second half of the trade pans out. But there is no dearth of movers within the broader markets. India Pesticides is one name. That stock is now up 10%, has moved up into the list of gainers, has India Pesticides. So that stock is doing well for itself. So 10% higher on that stock. Jaiswal Nico as well, a 9% higher there. We spoke of MMTC on Bazaar. That stock is adding to its gains, up another 8% in today's session. And John Cockerill India, we spoke about it on Bazaar as well earlier in the day during the course of this trading session today with Ramesh Damani buying stake. And that stock too has now extended its gains. It's up 8% as we speak, is John Cockerill India. So good going for that stock as well. On the downside though, Timex Group is now in a 10% lower circuit as we speak. So the promoter looking to sell stake through an offer for sale. The OFS for non-retail opens today and for retail investors tomorrow. Take a short break. On the other side, we get you some commentary coming in from Telecom Minister Jyotiraditya Scindia on the other side. Stay tuned.
Welcome back. As promised, we'll bring you some commentary from India's Telecommunications Minister Jyotiraditya Scindia on the major digital and telecom sector push from 6G to the overall market. Take a look.
6G, we're on track. The Bharat 6G Alliance has tied up with close to about 10 such networks across the world, ranging from the US to Korea to Europe, pretty much to Africa, across the world. I take a quarterly review. We've got 7 verticals working on different streams. Our aim is to be able to contribute 10% of patents to 6G when the rules get put in place by ITU and 3GPP. I said this many times, and I'm saying it again on your show, that we walked behind the world on 4G. We walked with the world on 5G. We will lead the world on 6G. Pricing is not my domain. On the second question of a duopoly, let me tell you this, that there are very few markets in the world, and having traveled to the World Mobile Congress and many other conferences such as that, which can boast of 4 operators operating in one geography. India possesses 4 operators today. Even if you look at the market share of Vodafone and BSNL, Vodafone today has 200 million subscribers. BSNL almost has about 100 million subscribers. That's a huge number. You're talking about double the size of countries in Europe. And so therefore, I would be careful in terms of terming India as a duopoly, because it's not. You have fierce competition, you have multiple players.
With that, we take a leave on this edition of Trading Hour from Ritu and me. Thank you for watching. We leave you with the market still close to the lowest point of the day. Halftime report on the other side.